Market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for yet another market recap here on Friday, March 3rd, 2023. I'm, of course, joined by my wonderful co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, not in person this week, but still here.
Are you missing the view?
Yeah, I mean, it was great.
So if you didn't join us last week, Bruce and I had the opportunity to do market recap live in person. It was a great episode. Make sure that you check it out. We have now been torn apart, but I'm sure we'll get together again sometime soon. We have lots to talk about today, so I'm going to jump right into it. We're going to talk about the Canadian GDP. We're going to jump into yields. They've gone above 4%. We're going to talk about AAII bears. You're going to tell us what that is and what that means. We're going to talk about cross-asset analytics. Bostic sues the markets. We're going to talk about US ISM service. And then, of course, we're going to get into some CSE issuer news. I have some fun news for us today. So let's jump right into it. What's going on with the Canadian GDP?
Yeah, so at the beginning of this week, the Canadian GDP was released, and it was at 1.6% on an annualized basis, which is a little bit slower than what most people would expect. You're looking for that sort of 2.5 to 3.5% GDP, but this is what we would have expected, given that interest rates have been rising, really over the last year. Things are cooling off just a little bit, which is what we want for inflation.
Good. So it's happening. And we talked about this last week. It is happening, but I think the term last week was that it's sticky. It's just not happening maybe as fast as we had hoped, right?
That's exactly right.
Okay. What's going on with yields?
Yeah, I mean, we've, basically through the month of January, we saw yields going down and we saw bond prices going up. And then we saw this huge reversal in the month of February, and that has continued over so far into the early part of this month. And what we've seen is that, if you look here at the chart, this is a long-term chart of the 10-year yield in the US, and you can see that it's back to that 4% level, which takes us back to that sort of 2007 range, so it's quite a number of years since we've been at this level. And of course, that's competition for stocks. And it's also, works into everyone's valuation models. And, it's really just showing that the market is still concerned about inflation and, what that inflation could potentially bring into the economy and into the markets, and then what the Fed does with inflation.
Okay, so just to clarify, so the yield that refers to, and when you say 10-year, that's a 10-year bond. So the new 10-year bonds that are being issued at over 4%, right?
Well, the new ones that would be issued, but also the existing bonds. So if there was a bond that was issued, a year ago, 5 years ago, whatever that is, and has a maturity of 10 years, then at that point in time, its yield, it trades every single day, and the price goes up and down, so that yield, that 4% yield, is what you would effectively be getting.
Because it'll match the 10-year bonds that are being issued today. And the reason that that's going up is probably because our rates are going up. Is that right?
Correct. Yeah, the market's anticipating that we're going to continue to see higher rates.
Awesome. Okay, what does AAII bears mean?
Yeah, so it's the American Association of Individual Investors. And if you remember what they do each week, they survey 1,000 people and ask them if they're bearish, bullish, or neutral on the market. And so what we saw was that if you go back to last year, we saw a record number of bears and a record low number of bulls. That swung around so that then we saw a positive for the first time in several months, where the bulls outweighed the bears. And now what we've seen is we've actually seen a slight increase in the number of bulls this week, but we saw a huge number of bears increase. And now there's more bears than there are bulls. And it just kind of shows you, really the short-term nature of investors in the markets, and the fact that, through all of January, when we saw the markets doing quite well, the bulls were more in favor. That was a more favorable position. And now, after we've seen a month of decline, and I think we've had something like up until this week, we had 6 of the last 7 weeks were negative. Now all of a sudden the bears have spiked up and everyone's bearish on the market. And, it sort of just gives you that fact that people aren't kind of thinking long term. They're like more up and down day to day.
Are these, is the survey done by individual investors or is this institutional investors?
No, these are individuals in this case, and they survey. So it's not effectively what they're doing with their portfolio. There are other surveys that look at that both from an individual and an institutional perspective. But in this case, this is just a survey where they're asking people, are you bullish? Are you bearish? So somebody could actually say, well, I'm bearish, but their portfolio could be positioned bullish. So that's the one thing that, quite often, most analysts kind of poke holes in this survey, is the fact that that is just a survey and not actually what people are doing with their portfolios.
I can't help but think the way that you described the Bears and the Bulls that I was watching a Super Bowl or something. So hopefully the Bulls win. Okay. What is a cross asset analytic and what's happening with it?
Yeah. And so one of the things that we do, and both myself and when Jordan's been on the show, we've talked about this. And what we do is we're constantly looking at relative relationships. So we're looking at, fixed income to equities. And what we, for the stock market to be doing its best, effectively what you want to see is equities in a leadership position. So they have more relative strength. So they're appreciating at a faster rate than fixed income would be. And so specifically what we're looking, there's a lot on this chart, but specifically what we're looking at is in the top pane, that's the relationship itself, and that's showing you the level. The next pane down is kind of the one that we're really kind of focused on. And what this is showing you is this is a momentum indicator, and it shows you that momentum went negative back in 2021. And then in favor, so it basically went in favor of bonds versus small cap US Russell 2000. And now what we're seeing is it's just at the cusp where you're going to see that momentum change and go positive for the Russell 2000, the IWM versus the AGG, which is the aggregate bond index. Hasn't been something that happens very often. It's, probably about a 2 or 3 year cycle typically. And that's, when you see the equity market do the best or the bond market do the best. And we've been in that period for roughly, we're coming up on almost 2 years now where it's been out of favor for equities, and now it's come back in. It's not there yet, but this is looking at longer term data. So there's pretty good chance that this is going to turn positive over the next month, and it'll stay like that, for a number of months afterwards.
Can you just clarify what small cap in the US, what would that be relative to in Canadian markets?
Yeah, that's more in the mid cap range. We have probably smaller brackets than they do in the US as far as how kind of investors refer to those. I think if you were to look at an S&P comparison, they would be very similar. They would break it down by market cap, but historically most people in Canada kind of think micro caps under 100, small caps from 100 to a billion, and then that mid cap range kind of excuse me, from $1 billion to say $5 billion, and then large caps over that. In the US, you have these $1 trillion companies, and so they have sort of bigger scale in everything.
Yeah, so I bring that up only because when we talk and when you analyze the small cap space, it does have a different meaning of what that reflects in our markets, right?
Yes, but it's showing you is the actual risk appetite of the market. So when we talk about, when you look at a Russell 2000, it's 2000 stocks. So it's bigger than say the S&P 500 or the Dow 30. So it's a bigger pool of stocks for one, but it's also showing you that if people are willing to drill down into that level, they're not as fearful, because what happens is when people are most fearful, they're going up cap and they're holding those biggest stocks because one is they don't move as much typically. And two is that they can get liquidity. They can get in and out with the biggest portfolio size.
Awesome. Okay. Bostic soothes the markets.
Yeah. So I mentioned just a minute ago that I think it's 6 out of the last 7 weeks as of last Friday that the market had been down. And it's really been on this rate concern is that, we saw the numbers, some of the economic numbers coming out in February, and it appeared that inflation was starting to reaccelerate and that the Fed would be increasing interest rates more than what the market had expected, and that they would also not be doing a rate cut. And so we actually had interesting comments out from the Atlanta Fed president on Wednesday. And after he finished speaking, he effectively was saying that, what they anticipate, or what he anticipates as a Fed member, is that they would be probably in a position where they would stop raising rates in the summertime, and then they would assess the data as it's coming along. But that was perceived very positively by the market, because the market's been, for the last 7 weeks, has been ultra focused on rates just continuing to go higher. And he said, well, no, we're going to have a period where we actually will pause on those rates. The market was super happy with that, and you saw a strong day on Wednesday, kind of intraday, when that happened, and then you saw follow through yesterday as well.
It's kind of like getting a day off from the gym, right?
Yeah, that's right.
I mean, look, all of these signs seem promising. It seems like, we had our talks last week during PREDAC in Vancouver, just about some unclear signs in the market, but things tend to be trending in the right direction, wouldn't you say?
Well, there's still a lot of uncertainty with around two really big things. One is inflation and how much that is under control, and whether or not we're going to see some sort of reacceleration, or if it just becomes so sticky that it's hard to fight and they just keep raising rates to try to bring it down. So that's the first thing. And then the second thing relates to that, because historically, as you've raised interest rates, it slows the economy. We've seen that in some areas, but in others we haven't. And you have this massively inverted yield curve. It's at records, where I think it was minus 90 yesterday at one point in time. And that's the market telling you that at some point in time, we're going to have an economic slowdown. And yet the numbers haven't transpired. And there was lots of people that thought by now we would be in a recession, and they continue to push that out and say, well, maybe it'll be later this year, or maybe it's going to be a 2024 situation. And of course, we don't know how severe it's going to be. So that's the thing the market's always trying to balance, how severe the recession potentially be, when it happens, and how long it's going to be, right? Those are, if you could tell someone those with certainty, then they would have almost the perfect formula for, investing from a global macro perspective.
Well, and this is where things get really interesting. We're going into PDAC next week in Toronto, the Prospector Development Association of Canada conference. This is where it gets really fun to watch some of the speakers, because people really do make a camp on either side. So you get some pretty egregious opinions on either side. It gets entertaining, especially if you get two of them on stage at once to hear them battle it out. Okay, what's going on with the US ISM service?
Yeah. So, along the lines of what we were just talking about, this is one of the data items that comes out each month. And it's basically showing you that it's a survey, or it's the Industry of Supply Management's Services Index. And what we saw is it accelerated last month in February. And, most people, again, would have expected, hey, we've had a year of interest rates. They've been the most aggressive in quite some time. We would probably expect to see things continue to drop off, but the services side continues to be very strong. Manufacturing's dropped off more than services. And, this is good and bad. The market's taken it as, quite positive, because the markets are up again today. But there's also some thought that, that means that, we could continue to see that sticky inflation in some of those numbers. And it means the Fed is going to have to continue to raise interest rates. So far, the tug of war between the bulls and bears, the bulls are winning, and they've, basically felt that this was a positive number, because it means the economy is stronger than what we expected.
Well, it'll be really interesting to see this play out. It seems like there's a lot of data on both sides of that camp. So we'll continue to watch, Bruce. Okay, we're going to jump into some CSE issuer news. Before I get into the story of the week, I wanted to mention I'm so amazed at how well our issuers are doing. We talked last week about all of the new issuers that had come to market. They were all in the mining space. I was amazed this week to see how many financings were closed and decent sizes. So congratulations, Nevada Lithium closed 5.12, EMP Metals closed 3 million, Safe Supply closed 4 million, and Golden Independence closed 2.193 million. Congratulations. These are not easy numbers for, especially the markets that we've had. So we're seeing lots of new companies come to market. We're seeing the companies go out there and raise capital. So to me, this is all a very good sign, for the junior and mid cap space. So congrats to them. The story of the week that I'm very excited about, we haven't had a celebrity sighting in a while, Bruce. I'm very excited about this one. Atlas Global, which joined the CSE not that long ago. They're a fairly new issuer of ours. They're a global brand. They're a cannabis company that works with premium growers to offer a variety of top quality cannabis products. They are definitely a global brand. They have an amazing management team. I met with them all, and there was some elements of it that came out of Israel, lots of Canadians. It's a great story. They joined forces with none other than Snoop Dogg, which is very exciting. I mean, this is a name that's synonymous with the cannabis space. Snoop Dogg said he chose Atlas to represent and launch my new brands for their innovation and global reach. I'm excited to work with their team to select my favorite strains for my brands and my fans. You know they will be amazing because they are personally approved by me. So that's a great quote from Snoop Dogg. What do you think, Bruce? We're starting to see these big ambassadors come back. We're seeing some financings. Do you think the cannabis space is about to set and launch for another market?
Well, I guess we're gonna have to wait and see. There's certainly pockets of it that do look very interesting. Yeah, there are.
Yeah,
there are some really interesting pockets.
Yeah, and in the U.S., just kind of seeing, I feel like there's a bit of a reinvigoration. It has a little bit of a ways to go, but there's stuff percolating there, which is great. Listen, Bruce, what should we think about going into next week?
Well, next week is going to be, sort of this continued focus of what we've talked about, really looking at economic numbers to see what happens with inflation. And that inflation is going to have an impact on what the Fed does and what interest rates do. And, that's really what's driving markets day to day.
Absolutely. Also, I need to mention that, as I said before, next week is the PDAC convention in Toronto. I've packed all of my big jackets and my big boots and heading out there with the whole team. The whole CSC team will be out there. We will be on the floor. Come and see us. We have lots of stuff going on. Hope to get a chance to see all of you that are out. Listen, Bruce, always a pleasure to see you. I look forward to chatting next week, and I'll tell you all about PDAC.
Yeah, have a great time at PDAC.
Thank you, Bruce. Have a great weekend.